Hey everyone, welcome back to My Financial Focus. In this video, I want to do an in-depth intrinsic value analysis and investment review of Visa's business and Visa's stock. This is their website right here. And for those of us who are watching this video who don't know, Visa is basically a business that helps facilitate payments in over 200 countries and territories between customers, merchants, banks, businesses, and governments through innovative technologies. And in this video, I'm just going to be looking through their annual report to understand their business, some of their revenues and profits for the year ending 2020, how those compare to previous years. So I'm going to do that by looking through their financial statements, of course. And then I'm also going to go over some of the risks that might be facing Visa's growth in the future. And the last thing I'm going to do is use a discounted cash flows model to figure out what the intrinsic value of Visa might be based on the business's current cash flows and financial health. So for those of you who are new to the channel, be sure to leave a like on this video. It helps out the algorithm and helps this video get recommended to more people across YouTube. Subscribe to the channel if y'all are interested in content like this, and leave a comment down below letting me know what you guys think of the video after it's over. Let's get started. So the first thing that I want to do is figure out the intrinsic value of Visa, and I'm just going to need these few values right here: the growth rate, the year one free cash flow, the net cash minus net debt, and the shares outstanding. I'm going to get the growth rate from Yahoo Finance just by looking up Visa and going to the analysis tab, scrolling down, and we can see the growth rate for the next 5 years is assumed to be 17.97%. So I'm just going to use that value right here. For the growth rate for years 6 through 10, I'm going to use a conservative value and just slice the growth rate for years 1 through 5 in half. And later on, I'll go through and give an example of what the intrinsic value per share might be if we switch around those values and play around with them a little bit. For the year one free cash flow, I'm just going to get that value from TradingView, which I can get right here just by going to cash flows for Visa. We see free cash flow right here, and the latest one is $14.52 billion. So that's the value that I'm going to use in this video. For the net cash minus net debt, I can get that by going to Yahoo Finance and going to statistics. And in statistics, we can see that in balance sheet, the total cash minus total debt is right here, $18.5 billion minus $20.98 billion. So that comes out to a negative current cash position. Stock ticker is Visa, and the shares outstanding come out to be about $1.68 billion at the moment. So after plugging in these values, we can see the intrinsic value per share for Visa comes out to be about $193.80 per share, which compared to Visa's current share price is actually not that far away, all things considered. It's only about $20 to $15 away from the current share price. And that's considering that the growth rate for years 6 through 10 would cut in half from the growth rate for years 1 through 5. So let's see what would happen if the growth rate stayed the same throughout the 10 years. Sorry about that. 17%. Why is that not working? Okay, there we go. So the intrinsic value per share in this case would come out to be about $248 per share, which is actually higher than the current share price, and a 30% margin of safety and 50% margin of safeties that we would want to buy into the stock at, if we wanted to buy in with a margin of safety, would be about $173 per share and $124 per share for Visa. So at the current share price, based on this model, it would seem that Visa is currently still a little bit overvalued for us to invest in it from a value investing perspective. But like I've said in previous videos, the discounted cash flows model isn't a perfect, fully comprehensive model. It obviously involves a lot of assumptions, like the growth rate assumption, as well as the assumption for a 10% return on our investment in the future. So feel free to do your own research and play around with these values to figure out what a good buying price would be in your specific case. The next thing that I want to do is go into their annual report and just start breaking down their business so we can understand what we're investing in as value investors, which is very important. I'm going to go to page 4 to start off, and right off the bat we can see a couple of operational and financial highlights for Visa. We can see that in 2020 the total volume, including payments and cash volume from their transactions, came out to be about $11.3 trillion. And the transactions processed in total came out to be 140.8 billion total transactions, which is a massive number. But Visa is, of course, the leading payments transaction assisting business in the market at the moment, so it's not surprising. The financial gap highlights come out to be about $21 billion in 2020 net revenue, up from $20 billion in 2018, but down from $22 billion in 2019. And we'll get into why that might be. I'm sure many of you can guess why for 2020 later in this video. And then the net income for 2020 came out to be about $10.8 billion, with the stockholders' equity ending at about $36 billion at the end of 2020. The next thing that I want to look at is page 5, and we can see their stock performance relative to the S&P 500 and the S&P 500 data processing index. And Visa has actually underperformed the data processing index, but they've destroyed the S&P 500 index. So for those investors that were holding on to Visa during this time, they definitely outperformed the market in this case. Next thing that I want to look at is a little table that breaks down Visa's revenues. Right here we can see their service revenues came out to be about $9.8 billion, data processing revenues $11 billion, and international transaction revenues for 2020 came out to be $6.3 billion. And after adding other revenues from license fees, technology, and other fees and product enhancements, we see that their gross revenues came out to be about $28.5 billion. They paid out about $6.7 billion to increase Visa product acceptance, as well as to build payment volume between different banks, merchants, and strategic partners. And so after that, from their gross revenues of $28 billion, net revenues came out to be about $21 billion, which is pretty good. So the next thing I'm going to look at is page 32, which goes into a couple of risk factors that could potentially cause some harm to the future growth of Visa's revenues. The first risk that I want to look at is on page 34. After reading through all of these risks, I pulled out 3 main risks that I want to touch up upon because I thought that they were very interesting. The first risk that I want to talk about on page 34 is this one, the government-imposed obligations, which occur in different countries, specifically like China and Russia, that only allow domestic payment networks to service those countries. In other words, they've made laws in those countries that prevent Visa from competing from an international standpoint in those countries. So payment networks, say in China, for example, like UnionPay, are protected from international competition like Visa. And obviously, because they're protected, they're able to grow unchallenged by international forces, and then as they get bigger, they're able to begin to expand internationally themselves and challenge Visa in that regard. The next thing I want to look at is page 43. Risk number 2 that I want to talk about is a macroeconomic factor, which is Brexit. Brexit, for those of you who don't know, was something that occurred in 2020 when the United Kingdom departed from the European Union. And the reason why this could cause some harm to Visa's future revenues is because they're going to have to adapt to different regulatory environments that exist in the United Kingdom and in Europe. And then the last thing that I want to look at is this risk right here, which is the risk that Visa might not be able to keep up with technological advancements quick enough, like tokenization, cryptocurrencies, and blockchain technologies that could pose a threat to the future revenues for Visa, because they are very, they are very different and innovative technologies that could change the way that payments are processed in the economy. So the next thing that I want to look at is page 58, which is basically a quick little revenue breakdown from a geographical standpoint of where Visa's revenues are coming from. And we can see that in 2020, as well as in 2019 and 2018, the majority of their revenues actually came from international revenue sources, which is a little surprising because typically for US-based companies, most of their revenue comes from the United States, but I think it might be actually a bonus to see that Visa's revenues are so diversified because it limits their risk in the event that something were to happen in the US market. Their revenues, geographically speaking, are very diversified. And we can see right here the percentage changes that are taken in account for the change in revenues in the US market and the international market for years 2019 and 2020. It increased, or actually decreased, by $977 million from 2019 to 2020, and then increased by $1.4 billion from 2018 to 2019 in their international markets. The next thing that I want to look at is the next page 59. It just gives us a quick little breakthrough again of their revenues broken up by the revenue sources, but it also gives us the percentages. And remember how in the beginning of the video I said I was going to go into why their net revenues dropped from 2019. Well, we can see right here that their international transaction revenue actually dropped by $1.5 billion from 2019 to 2020 as a result of the global pandemic that occurred in 2020. So that definitely had a negative impact on their net revenues. Next thing that I want to look at is page 75, which is just an in-depth look into their balance sheet, just to give us a good snapshot of what their financial health looked like at the end of 2020. We can see that their total assets increased from $72 billion to $80 billion in 2020, and their total liabilities increased from $37 billion to $44 billion. Their total equity increased by about $2 billion from $34 billion to $36 billion. Next thing that I want to look at is their income statement. We can see right here their net revenues and then their operating income as well as their net income, which comes out to be about $10.8 billion in 2020 over net revenues of $21 billion. That gives us a net profit margin of about 49 to 50%, which is crazy good. Right here, if I scroll down a little bit, we can see that they break up their earnings per share and their shares outstanding from basic to diluted measurements. And what this basically means for anyone who doesn't know, the basic earnings per share is basically the net income allotted to each share of common stock. The basic weighted average of shares outstanding is basically the number of shares a company calculated for after adjusting for changes in the share of capital over a reporting period. The diluted earnings per share is essentially the earnings per share, but they also add on all of the securities that can be converted to common stock. So that includes things like options, for example. And so obviously the diluted earnings per share value is going to be smaller than the basic earnings per share value because the net income is going to be divided by a larger shares outstanding value when they take into account everything like options. And the diluted weighted average shares outstanding is just the shares plus all of the securities that could be converted to common stock shares. The next page that I want to look at is page 81. And this is the last thing that I'm going to be looking at in this video, which is their statement of cash flows. We can see, let's just zoom in a little bit here. We can see that after adding back all of their non-cash expenses, that their net cash provided by operating activities came out to be about $10 billion, which is down from $12.7 billion in 2019. In terms of their investments, we can see that a large part of their investments of their positive inflow from their investment activities came from the sale of their investment securities, and the largest use of their capital in their investment activities came from a repurchase of more investments. And the last one, which I think is the most interesting, which is their cash flows from their financing activities. We can see that over the last couple of years, 2018 to 2020, they've been heavily repurchasing Class A common stock shares. So that's a pretty good sign for shareholders who have been holding on to Visa stock over the last 3 years, because it means that as the years go on, the number of shares that they own in Visa begin to gain more and more value because there are less shares on the market. And then Second most important thing that investors care about when holding onto a stock are the dividends that are paid out to them. And we can see that the dividend payments that have been coming from Visa to shareholders have increased over the last 3 years. So those are a couple of things that investors definitely care about. But I'd love to know how you guys see Visa as an investment and whether you guys are holding onto shares of Visa. For my perspective on what I want from return on investment, from what I can see, Visa might still be a little bit too expensive for me to buy into it, but I'd love to know what you guys think. And also let me know if this video provided any value to you guys in the comment section below. Subscribe to the channel if you guys haven't already. Leave a like on this video for the YouTube algorithm, and I'll see everyone in the next one.